Good day, this is goldsilverinvestigator.com with a weekly wrap-up and chart review on March the 4th, 2012. We had two important events occur this last week. One, the ECB provided $712 billion to 800 Eurozone banks on Wednesday. And on the Thursday, we had the ISDA, that's the International Swaps and Derivatives Association, rule that the credit event regarding the swaps on Greece's debt did not represent a default, even though Greece's debt is trading at 30% of its value. Those were two critical things to bear in mind, because on Wednesday morning, gold and silver were taken down just as Bernanke started to speak. Gold dropped $90, while the largest credit injection is taking place in Europe, and silver dropped $4. Now, if you can imagine, if you're giving a liquidity injection into Europe, you'd expect that the gold and silver would be going up, but the mainstream news was focused on Bernanke speaking and the fact that he said that the unemployment figures or employment figures look better, and that because of that there may not be a need for quantitative easing at this stage, where in actual fact they were doing quantitative easing at that very moment. A $10,000 contract for gold to be sold hit the market as Bernanke began to speak. That dropped the price probably by about $30 or so, and then the algorithms kicked in and took it lower and dropped it $90 in total. So, very interesting situation. Before I get into the charts, please go to goldsilverinvestigator.com and sign up for our mailing list. And now over to the charts that I want to go through today. Firstly, gold. As mentioned, you can see the big drop here, and that occurred on Wednesday while Bernanke was speaking and thereafter. And if you look at the weekly chart, you can see gold was just beginning to break out here, threatening to break out above 1800. It had been here just before, and once it broke out there, it was looking very, very powerful. And that was one reason why the authorities were very keen on taking it down. If you look at silver, we can see the same pattern here, big breakdown here. And if we go to the 60-minute chart, you can see it more closely. 60 minutes. More closely on the 60-minute, how we broke down here in the 1 day. And really in 3 hours there quickly. And looking at the weekly chart, you see we were up here. And basically we were free to go to 40 and above. And that was really why the authorities had to manage it and control it at that stage. Look at what happened to the S&P 500 on Wednesday. Very little down compared to the gold market and the silver market. You'd expect to see this down here around the 1330 level or so. And on the Dow Jones, you'd have expected to see it down here, probably 12,300 or so, for an equivalent drop that we saw in the gold. So you can really tell this is the authorities are really trying to control the euphoria in the gold market. And I can show you some other charts here that perhaps shows that even better. Here's a trading channel that we've been in for the last 3 years for gold, back from early 2009 all the way up here. We got out of it last summer when gold went higher. We were back in it and we were right up close to the 1800 mark here. You can see that here now. And obviously, had we broken out of this, the authorities were getting worried about it, so That was the reason for Bernanke talking and mentioning about employment figures looking better and no need for quantitative easing at this stage. Another chart to show you. Gold. What is it going to do from here now? Could go on up from here, but if you look at this is a reverse head and shoulder formation possible. Here's the first shoulder. This is upside down. Here's the head, and now perhaps gold could map out another shoulder here. If it did that and came up here, that would be a very, very bullish situation. So we could go up from here, or we could go work our way down a little and back up, possibly to form a reverse head and shoulder pattern. Either way, gold and silver are the way to be with the amount of liquidity being injected into the market at this stage. I'd like to close with one last chart before we go. Here is a chart showing you all the commodities and their performance during this year to date, beginning of this year. So in the last couple of months. Natural gas minus 17.5%, but look at silver. 24.6% since the beginning of the year. Gold, 9.3%. I mean, things are looking good here. We can't sneeze at that. So keep the faith, guys. Things are going well. And please, sign up to our mailing list at goldsilverinvestigator.com. And have a good day. Goodbye.